Good evening and welcome to Money Matters. My name is Jim Butler. I'm with Videre Wealth Management. My co-host tonight is Dave Emery with the Marshall Financial Group. Hi, Dave.
Hi, nice to see you.
Good to see you. Well, before we get to our exciting guest tonight,
Sure.
why don't we talk a little bit about profile of some clients that you typically see, and I'm sure to some extent the folks in the audience can relate to some of that. So what are some common traits, Dave, that you see with people that come to the Marshall Financial Group with concerns or questions?
Right, so I would say one of the big groups of people we're seeing right now are people that are in their 40s or 50s that have some type of retirement goal on their mind. They're not ready to retire yet, but they just have a little bit of anxiety about how are they going to be able to afford retirement. You know, a lot of times they don't have a really good understanding of where they stand and kind of where they want to go, and then how to get there, and then once they're there, how to sustain it for the rest of their lives. So that's really a large demographic of people that are coming into our business these days.
Do they tend to have a primary concern once you start your discovery process to learn more about what that means to them?
Right.
Do they tend to have like one or two primary concerns?
Yeah, I would say the big concern is lifestyle. People want to maintain the lifestyle that they're accustomed to. I just heard this morning when I had a client in, said that I don't want to be pinching pennies when I retire. And how am I gonna, if I stop working and I make a mistake that that I want to go back to work, well, it's going to be difficult to come back at the wages I'm making. So I hear that a lot.
Right.
So that's a lot of the people that come in. A lot of them come in also around college planning too.
Okay.
Because the affordability of college has just gotten so out of reach that, and really what college is a retirement planning problem. Because if you can figure out how to reduce the cost of college, right after you have your kids go through college, they're thinking about retiring.
Right.
So,
yeah, sure. Do you find that the folks that by the time they come to you, that they're either saving enough money to meet those goals, to maintain that lifestyle, or that they have accumulated enough assets, or is there a gap?
Yeah. No, that's a great question. Really, it's all over the map, but really the value that we help clients with is identifying that gap and coming up with ways to kind of work through that gap. And also having a lot of conversation on what retirement looks like. When example I like to use is when my father retired, there was a date that he needed to get to, and once he got there, that was it.
Right.
Now, today, people really aren't, more and more people really aren't retiring that way. They're retiring, really the best way to do it, in my opinion, is to retire to something. A lot of times people will not want to do the job they're doing, but still like to be active, use their mind, maybe earn some income, but not have the pressure that they have to go to work.
Right, right.
So,
how about from an age standpoint? I'm curious, do you see folks coming in that might be looking to retire too early and they haven't given themselves enough time, or just the opposite of what you started touching on, that they're looking more for longevity?
Really the big thing that I see is they really don't know where they stand. I mean, they may be involved with a company, so they have a 401k plan, they hear about Social Security. They just really don't know where they stand and how all those pieces will come together to basically duplicate a paycheck when they're in retirement. So, have they saved enough or not enough? It's really kind of all over the map, and it really is a function of lifestyle too. The lifestyle you want to live.
Right.
So,
right.
How about you? Tell me a little bit about your practice. What are you seeing?
Well, so I'm just going to compliment a comment that you just touched on, and kind of a furtherance of my question, and that is, when people do retire or move to the next phase, what I find is people that stay engaged in some capacity, Dave, they seem happier, they're healthier. In some cases, they're busier than they were during their work years, whether it's travel or family. but I do find the vast majority of people stay engaged. They do something, volunteer work, family. Maybe it's a second career.
Right.
They're doing something because they're healthy.
Right.
For the most part, maybe have enough money to support a certain lifestyle. And part of the answer to that, I think, is, well, what's going to keep you happy?
Exactly.
What do you want to do? How do you want to
Exactly.
spend your time?
Yeah, you're exactly right. I mean, I've had a client in the other day who retired recently, and very active. I mean, it's been exactly 1 year that they retired, and he's on part of a pool, shooting pool club, and she's doing this. I mean, they have all these activities that they hadn't done before, and they're just really enjoying life. And
Right.
I have another client who we also is very active, and some of the what we found with this client is their lifestyle is such as that they may run out of money. But one of the big things that we talk through is we model it based on the investable assets and Social Security and pensions and things like that. But we're seeing more and more of the opportunity of using reverse mortgages later in life. So that's kind of a little bit of the safety net if you think you may not have enough assets to support your lifestyle. How do you use the equity in your home? I think that's going to become more and more of a case moving forward.
Yeah, good point.
So.
Well, let's move to our question. It's actually an
Okay.
interesting twist to
Sure.
what we've touched on. Linda Walton in Philadelphia writes in, what are some financial plans that you can make to reduce loss in a divorce?
Reduce loss in a divorce. Well, this is an area that I work with clients on. I help with doing divorce planning, and I'd say some of the big areas to reduce the loss or the cost of divorce. The first thing is having a working relationship with your spouse, because it's
easier said than done.
Yeah, a lot of times there's obviously a lot of emotion, and if you can have a workable relationship with your ex-spouse, that does help a lot. Another area is just to understand when you're going through a divorce. One of the biggest costs are attorney fees. So it goes to having a good workable relationship with your spouse, and you can work through things. If you fight, then that oftentimes costs more. So that's another area. And then I guess the third thing is getting your hands around all of the marital assets. I mean, that's kind of really a key piece of things. Assets and debts. A lot of times people don't realize some of the assets that are marital assets, like pension plans. Because pension plans don't really come in, you see the 401k statements, they come in quarterly, but regarding pension plans, you may have an employer from earlier on in your marriage, and you left, and you don't realize that there could be a pension there that has value. Those are a couple of things to kind of keep in mind.
Yeah, I think you touched on it. It's such an emotionally charged period that sometimes if you can have some kind of outline or plan to come back to stay focused on, that might be able to alleviate some of those emotions.
Yeah.
Good answer.
Yeah,
thank you much. And if you have a question that you would like to send in,
you can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says, Send us your questions. While you're on our website, you can find information about our host and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, MONEY, -matters, MATTERS, TV.com.
Welcome, Roy.
Well, I'm glad to be here.
Good to have you. Roy's going to educate all of us with tax strategies, cash flow strategies. So why don't we start off briefly? Give us just a thumbnail sketch as to what you do for a wealth advocate and your clients.
Well, having been a small business owner, I work with high-earning business owners who are, acquiring wealth, and obviously they're paying a lot in taxes. So that was one of the big hurdles that I had to overcome when I was in business. And a couple of years ago, I hooked up with a company called Financial Gravity that helps me advise high-earning business owners on how to legally, ethically, and morally avoid taxes.
Okay. So those words are pretty charged. Does that mean you provide tax advice, or do you work with their tax professionals?
The answer to that is yes to both.
Okay.
We first come up with a tax blueprint, we call, which is it's a roadmap to proactively save taxes for the business owner.
Mm-hmm.
And it's customized to their personal life, and we actually sell that to the client, and that they could either use us to implement, or they could actually take it to their tax professional. We find that we are a lot more open-minded than their existing tax professional, because we do it so much, and we are used to all of the ins and outs of making it work.
Mm-hmm.
We've never had a case reversed that we've implemented.
Okay.
So we're highly successful in that area, and that instills confidence, with the client, and we're putting money back in their pocket. So it has a lot of impact.
Sounds like there's a process to go through to make sure that all the I's are dotted and the T's are crossed.
Oh, yeah.
For some of the
Everything is
strategies.
documented to the letter, and even if it's a far-reaching, pushing the envelope, we have all of the the countermeasures put into place, so that there's no problems.
Do you have some strategies that can help a business owner save on their personal taxes?
Absolutely. We generally, we'll look at the tax return, and we have a series of questions that we answer, that we ask the owners in their personal and business life. And we plug these numbers into a formula, and we'll come up with an estimated tax savings. We guarantee at least double that tax savings. I'm sorry, we guarantee double our fee.
Okay.
Our fee is half the tax savings. However, we generally find multiples of 4 and 5 times what our fee is.
Right.
But that's just the starting point. And we look at things like how the entity is structured, whether it's an LLC, if it's filing their return as a sole proprietor, that's a problem. We often will change that. Are they earning enough to form a closely held insurance company where they can defer $1 million a year in earnings? There are do they have the proper medical plan? Do they have key personnel taken care of, so they get the proper write-offs? We just look at every aspect of the business, and the longer we work with them, the better it gets.
Right.
So you have an ongoing relationship, or is it pretty much you give them a blueprint and you help them implement it, and then the savings kind of just are reoccurring?
It's an ongoing relationship. 99% of our clients implement what we call a tax operating system. And that is an ongoing monitoring of their day-to-day activity, just to make sure that they're staying on track.
How about, I'm going to go back to the tax professional. I'm just curious, if you're coming in with some strategies that basically save them some money instead of paying it to Uncle Sam, do you find the accountants or CPAs are defensive or adversarial, or are they open?
It depends on where we come in. Sometimes they are adversarial, and sometimes we will take over their tax returns.
Right.
And sometimes I'll say to the client, maybe you've outgrown your tax professional. Because they start when they're not making much money, they stay as a sole proprietor, and that's the way the tax professional has been filing the return. Now they're making substantially more, and they're not doing anything different to
Right.
counteract that
Yeah.
extra income.
So are there some underutilized strategies that kind of keep coming up that you see?
Well, primarily, if you're talking on a personal level, there are things like you can employ a child.
Mm-hmm.
If you document everything, that's $6,400 per child per year that you could avoid taxes
Right.
and use that to pay tuition.
Mm-hmm.
If you employ your family members and you have a swimming pool, you can write off part of the cost of that maintaining that swimming pool because it's an athletic facility for your employees. So those are two examples of
Interesting.
different strategies, and there are a lot more complex strategies that we could spend hours on that they could implement.
What size companies do you find yourself working with primarily? Like from either a revenue standpoint, Roy, or employee size?
I would say anywhere from $1 million to $10 million
in sales.
In sales, it depends on what they're doing. Some of the healthcare professionals are up into the tens of millions,
Right.
and they don't have many employees. But then there's manufacturers that that have a lot of employees and have low volume. So after we look at their personal side, then we'll look into the business side because there's a lot of tax saving strategies for the business itself. We'll look at property tax appeals. We'll look at what's called cost segregation. It's a method of accelerating depreciation on an engineered study of equipment and not equipment, just personal assets within the commercial building. There's a workers' opportunity tax credit, which is if a company has a fair amount of employees that live in economically challenging zones, the government actually has zones that where if you hire those individuals, you'll get a payroll tax credit. The paperwork is very, very difficult. So we have,
Really?
it's extremely difficult. The success rate for the average business owner is like 1 in 10 succeeds. Our rate is like 9 out of 10 because we've actually put it online and have a very, very unique way to file those papers. But the average, we tell the employer they could get an average of $2,400 per employee.
Wow.
Of
Now,
of government subsidy?
Yeah, these workers' opportunity tax credit. For instance, if you hire a veteran, you get a $9,000 tax credit on their payroll taxes. Ex-felons, there's a tax credit. And there's like 14 different categories of employees.
I never knew that.
I never knew that either.
I think I've heard inklings about
Yeah.
that, but that's
Yeah.
actually pretty impressive.
Yeah, so we offer a subscription service to the employer, very low cost. If they get one rebate, they've paid for it. But it's very non-discreet. The employee does it at home. They just go to a website, answer a few questions. It goes right to the proper authorities, and the employer gets a notice that they'll get it. They have credits building. So, two primarily, especially high companies that benefit are recruiters because they
Makes sense. Right.
they have a high turnover of employees, and then they can if they know the employee is able to get the rebate, then they could also tell the new employer that this employee comes with a rebate.
Right.
So they can essentially double dip into the
Absolutely.
process.
Interesting.
So-
Yeah. Do you have a geographic area that you concentrate in? You know, whether it's the Delaware Valley area, East Coast, or do you go nationwide?
I could go nationwide. You know, a lot of it we don't need a personal visit. We could do everything by computer and phone. Primarily, I focus on the local market of Greater Philadelphia area.
Right.
Okay.
Right.
From a financial planning perspective, what should clients do to achieve financial success today, from what you see from your practice?
Well, first of all, make sure they have a mathematically correct method to ensure income, protect their assets, and make sure they have an emergency fund. And if they want to provide for their heirs, make sure that there's a provision for that.
Right.
Right. Right.
Makes sense.
So you have a system that you like to take clients through, almost. I'll call it a checklist, call it a procedure system, to make sure that they basically have their financial house in order. It sounds like from a personal standpoint, and then to some extent from a business standpoint.
Well, we get the taxes squared away. We put money in their pocket, and generally they'll ask us to help us grow that money.
Right.
So then we'll go into the standard procedures that you and Dave know. It's pretty much the same for every advisor.
So you mentioned in this conversation, Roy, medical professionals and then manufacturing companies. Are those two profiles of firms that you work with?
Yeah, healthcare. We find that there's a lot of excess profits in those areas. Even contractors and developers is another key market. But obviously, doctors are high earners. They're challenged with this big time.
Yeah.
It's a sweet spot for us.
So some of the business owners that you help, do you have to be worried about the tax strategies? They have to give it to all their employees, or is it?
Oh yeah, well, most of them. Well, primarily we look at the owner and how we can help the owner,
right,
and how we can help him and not affect the employees, if he doesn't have to.
Right.
We protect the owner because he's the one with all the risk.
Right.
And we look at the big picture, obviously. Sometimes they may not have the right retirement plan in place. Maybe a 401k is not the right method. Maybe it should be a simple, simple IRA. Or maybe some other plan. It just depends every bit. We do work with very small companies as well. About 500,000 revenue is probably the smallest companies.
Okay.
But I've helped people. I've helped landscapers.
Right. Right. I have to throw this exception out there because we don't like to date the taping of this show because it may air at a different time. So with that caveat, we certainly know that tax legislation is a topic of conversation. And so I'm just curious, is that not so much what do you think, because we could be here all night talking about that, but more, does that come up in conversation? Do clients ask you about, well, what if?
Yeah, absolutely. And what I always will come back with is we'll do what's best at the time that we need to implement. Maybe you should be a sub S corp today, but maybe tomorrow you should be a C corp.
Right.
It really all depends on the atmosphere of the tax, of what's going on. I mean, there's always going to be a need for tax strategy, in my view, because death and taxes are the two things we always face.
Yeah. Well, it sounds like that with the tax law change, any change, it's good for business because you're going to have to plan around it.
Sure.
The rules just change, so just make sure you just change with them.
Exactly.
It's interesting when I hear you answer that. Oftentimes you'll hear from politicians, tax simplification, but when does that ever happen?
Yeah.
Yeah, I think not.
Yeah.
Right.
No, I don't think it's just too complex an issue. There's too much politics around it.
Are there other advisory relationships that your clients look for where you can help them with, whether it's on the insurance side or maybe a different tax person? You know, it's great that you can provide, Roy, a broad array of services, but you know, I don't know, do they look for someone to say, hey, I want somebody else to invest the money, or I have maybe I have a relationship with a life insurance professional?
Sure. I mean, we'll work with other professionals. Generally, though, it's so compelling that they'll ask us to do it.
Okay.
Just because the way they view it is, here's one central place where all of their financial life is under scrutiny. So if an insurance professional is doing one thing, we should know about it. So why not use us?
Right.
The exception would be maybe an attorney, an estate planning attorney. We'll work hand in hand. We'll work hand in hand with the accountant as long as they're open-minded. It's always, especially with the corporate side, because they know the numbers.
If they don't have, you mentioned attorney, if they don't have a relationship with somebody, are there attorneys you work with that you will bring into the picture?
Sure, absolutely. I mean, just doing what we do, that's a necessary item that we all need to have.
Right. Yeah. Yeah. So, are there certain obstacles that you need to overcome with your clients that they are reluctant to approach? In other words, maybe talking about the end of life scenario and the challenges faced with that. Do you find any particular aspect of the planning process that you outlined before, Roy, that clients really pull back from and say, I don't want to go there?
Well, I don't think any client wants to talk about end-of-life planning.
I just use that as an example.
Yeah. But one thing we will stress is exit strategies, because that is that there are so many things that you can do to help the client exit their business and walk away with the amount of money that they need. So, we have a lot of different strategies that we use to, avoid taxes in that case. But yeah, sometimes we do have to help them. We have to really shed light on that to make sure that they understand the implications if they don't do something.
And eventually, it's ultimately up to them anyway.
Right.
All you can do is expose it to them, and they either want to do something about it or not.
And generally, I would say almost 100% want to do something.
Right.
The biggest problems come when they have maybe a family member
Right.
who's going to inherit the business, and they're not sure how to transfer that in a inexpensive way for that person. They're worried about burdening that person with the nut to pay their retirement, basically.
Right.
Yeah.
Roy, we have to wrap up, so we appreciate your insight and experience, and hopefully our listeners have picked up at least one or two really useful ideas. So thank you for sharing that with us. And tune in to our next show. Matt Silverhart, who's a CFA with Ameriprise Financial, will be our follow-up guest. And thank you for listening to Money Matters.